Hello and welcome to another MCO update on Shell. Today I wanted to cover Shell because later this week earnings are coming out. Shell is also reporting earnings here on Thursday, the 30th. So I wanted to make some more updates this week on stocks because it is a very, very important week. I mean, I'm not sure if you're aware, but some of the world's largest businesses are reporting earnings this week. And I thought, well, the oil market is interesting. Yeah, I shared that a few days ago already in the video about Exxon. And then I made a video about Schlumberger, one of the largest oil services companies, which is, in my opinion, in a possible trend reversal. And I think the oil sector could get interesting in the coming months. There are stocks which are close to significant lows. There are stocks that are close to significant highs but could still rally some more. I think Shell is one of these, could still rally some more in this cycle, but actually it's not a structure that is down here anymore, right? In the beginning of a major rally. So I think we're looking at a rally here from 2020. In my opinion, this is an upside impulse which is unfolding, and we might have recently bottomed in wave 4 in April. It's an interesting one because, first of all, there is still a long way to go. It might have completed a correction that started a year ago in April 2024, 1.5 years ago. So that correction lasted a year, and we could now be in this fifth wave to the upside. This rally started. We're currently trying to break out above the March high. And so as you can see, we are likely in a fifth wave to the upsides. That's the thesis. Larger degree targets are pointing to the area 3,670 plus. This is GBX, yeah, so British pence, basically. This is the home exchange. I'm looking at it at the LSE. There are secondary shares, listings on the Euronext euros, and then in the US as well. Yeah, there's an ADR listing. So you can trade in US dollars, you can trade in euros, you can trade in GBX, okay? So yeah, it's not like 3,600 pounds, right? This is pence. So if we zoom in a little bit further, then we can see that I go to the daily chart, that there are some other targets as well. So the larger degree target points to this area 3,670. There are smaller degree targets based on the internal structure, yeah, because I can see the potential that we already bottomed in wave 2. This is a 5-wave move up that topped there in August. We had a 3-wave pullback, but it was shallow. So I cannot rule out that maybe wave 2 is extending. For exactly that purpose, I added this support area because it might be that we're not yet in the breakout. We're currently trying to break above the March high, as I said, around 2,840. And then this will be a very important breakout point and resistance around 2,960. So maybe this week we will get the decision if the wave 2 is still unfolding or if we're already in a breakout. If we're already in a breakout, then the earnings might be the catalyst to drive the price higher in a third wave towards 3,177. And then, well, ideally even a bit higher, maybe even 3,330 eventually. Then a wave 4, and this wave 5 should get to 3,430 plus. So maybe it aligns in the end with that larger degree target. So interesting stock, absolutely. Also from a fundamental point of view, wanted to talk about that with you as well. And yesterday I covered XOM, which also, you know, these guys report earnings this week as well. Exxon Mobil, so we want to compare a little bit. So let's take a look at some fundamentals and key financial metrics. If you're wondering where you can trade Shell, you can do that, for example, if you use XTB, that's our partner broker. Here you can trade the US, no, not the US, well, yes, the US as well, the US stock. There you go, the ADR, that's just basically, yeah, it's not the real stock, but you can trade it as a stock in the US. The main one is obviously in the UK market. And then you can also trade it in euros, depending on what you want to do. You can also trade the CFDs. So if you're interested to check that out, feel free to use the link in the comments section. If you are interested in maybe opening an account at a broker, maybe you're looking for a broker, then you can do that here and you support the MCO project as well. By the way, XTB, they have a project, not a project, promotion until the end of the month, where you might qualify, depending on where you live, you might qualify for a free stock, so feel free to check it out. We also built our portfolio here. Yeah, Shell is not part of it, but we bought Schlumberger, or I bought Schlumberger a few days ago before it started to move up. It's also in the oil industry, and that is why I find the Shell also so interesting, because I think the oil market, could perform quite well going forward. But we have to be selective, right? So if you want to find out more about that portfolio, feel free to check out the MCO stocks membership. I put the link for you guys in the comments section. It's the stocks membership where we cover XOM as well, for example, yeah. And depending on your tier, you can get access to, well, hundreds more stocks. What I wanted to actually take a look at here is the financials. You can see these here as well in the X station, which is the basically the dashboard. And you can see that Shell is a dividend payer, so they pay, I think, 4 times a year typically. Yeah. Next time should be in pay date in December, and the X date is November. But let's compare the fundamental, the key facts, and valuation metrics with XOM. I only covered XOM yesterday. Now, first of all, I mean, most of you know Shell, right? But really, what are they? Well, they're not only in the oil business, right? They are one of the largest integrated energy companies in the world. They actually operate across the entire energy spectrum. So historically it was oil, right? But then obviously they moved away from that, kind of, or at least diversified a bit, which is important in today's world. Yeah. So moved away a little bit from traditional oil and gas exploration and refining to liquefied natural gas. You might remember we talked about that when we covered XOM. They do the same, and they also have a growing portfolio in renewable energy and hydrogen solutions. Some of you might not know that. So while Exxon, just to compare them, while ExxonMobil remains more heavily focused on oil and gas, Shell has been positioning itself more toward energy transition and diversification, particularly in natural gas, biofuels, and also power trading. Now let's talk about some of the key metrics here. So earnings per share, $2.25. Shell remains profitable, though less so than ExxonMobil. I must say I'm not quite sure if this is in British pounds now or US dollars. I would say it's probably in British pounds. 2.25 per share, earnings per share. Yeah. ExxonMobil was 7.04, so less so than ExxonMobil, and that's partly because Shell's operations are broader, right? They reinvest more in low carbon projects. They have lower margins in renewables compared to traditional upstream oil. Price to earnings is 16.8. That's right in line with Exxon's. I think it was around 16.5. Both trade around fair value. Okay, so while it is possible that we have already started to move up, we're not like super expensive here. It's neither cheap nor expensive, but with the trend being up, obviously. Now, for Shell, the PE comes with a broader business model, so it reflects stability with diversification. We also have, what can we look at? Return on equity, 7.4%. This measures how much profit a company generates from shareholder equity. 7% is modest, lower than Exxon's 11.7%, which tells us Exxon is using capital more efficiently. Yeah? However, Shell's lower ROE is offset by less volatility in gas and downstream segments. ROIC, which is return on invested capital, this shows how efficiently Shell uses its invested capital to generate returns. It's on the lower end here as well, but still solid given today's oil price movement. And Shell's push toward renewables, which are more capital intensive. Debt to equity, 0.36, and total debt to assets is 0.42. Again, also here they carry a bit more debt than ExxonMobil, but it's still very manageable for a company of this size. By the way, I looked it up, their debt levels have come down substantially since 2020. Overall dividend yield, 3.8%, slightly higher than Exxon's, which was 3.4%. And they pay 4 times a year. So we have to say that Shell has become a bit more disciplined in terms of dividend payouts since the 2020 cuts, right? Operating margin is around 10%, almost identical to Exxon's, which is a little higher, 11% on Exxon. 10% is also a strong result for a company with a mixed portfolio of fossil fuels, gas, and renewables. And EV to EBITDA 4.9 is very low, and that's a good sign. It suggests that Shell might be slightly undervalued on a cash flow basis, yeah? Especially if we compare it to Exxon's 7.3. So in other words, the market prices Shell with a bit more caution than Exxon. Maybe that's because of the European base, and maybe even transition focus, but that could also be an opportunity. I mean, the chart points to the upside, yeah? If we interpret this a bit, I mean, Shell is a cash flow machine with moderate growth ambitions. It's not a high growth business. They are not chasing high returns. It's more about, I think, balancing between shareholder payouts and then energy transition investments. It's kind of stable. Yeah, it's not maybe super hypey, you know, not spectacular, but very resilient. Whereas ExxonMobil focuses more on maximizing returns in hydrocarbons, yeah, and Shell is trying to build a hybrid model more like that survives both fossil and renewable eras. And yeah, that might explain why the margins are slightly lower. Again, this is not a full-scale fundamental analysis, but I thought we'll take a look. And you know, this week's earnings are coming up, so again, if we compare these two, ExxonMobil is like a profit engine, more focused towards profits, focused, higher margins, tight capital control, and Shell is more, you know, it's slightly lower profitability, it shows, but broader diversification and a slightly cheaper valuation. So you could say Shell looks slightly undervalued relative to its cash flow potential and offers a higher dividend yield for smaller risk. But Exxon gives you slightly higher returns, yeah, at least from the numbers, yeah. Chart-wise, I think they are both fairly similar because they are both, you could say, stuck, or not stuck actually, they are both moving in a fifth wave. Exxon as well, I've been tracking Exxon quite a lot for years now in our membership, and it's constantly gone up. Shell might have bottomed this year and might have to chase a little bit, but both are essentially pointing to the upside, which tells me the oil market is still looking towards higher prices, yeah, stock-wise as well, stocks, yeah. So that's the update on Shell. Hope you enjoyed the update and the short fundamental analysis. Hope you enjoyed the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates, then yeah, also make sure that you follow us on Patreon, on Discord, where you can get additional updates. I'll put the link for you guys into the comment section. Also, if you're interested maybe to build a new portfolio, if you're looking for a broker, maybe consider using XTB. We're building our portfolio there as well. We document that within our membership. I'll keep you updated. Thanks so much. Bye-bye.